Trump's energy stocks will help you retire early. Nvidia earnings beat on earnings per share, beat on revenue. Guided well, massive sell-off here regardless. Does it mean we're in an AI bubble? It's too soon to say. It does mean that money is flowing into energy as well as healthcare. And energy historically has been a safe haven. In 2022, when the market went down significantly, energy was a safe haven. There are two stocks that can perform well. Trump has been good for energy stocks. I think that's no surprise. The two tickers that seem to benefit right now are GE Vernova, ticker symbol GEV, which had $10 billion of revenue in quarter three, up 10% year over year. Also, NRG Energy, ticker symbol NRG. NRG had $7 billion of revenue, up 5% year over year. They also raised guidance for 2025. The pullback in the market brought both of these to favorable levels at the bottom of a range, which we'll look at in the chart in just a second. And they both are reasonable stocks to own as we enter into a period of uncertainty, given that rate cuts are not expected, or at least are going to have a little bit of delay as we move into December and the start of 2026. This is not financial advice, but there is a $19 Black Friday offer for the Stocks Community Discord. You can see that in the first link in the description. If you like this video, hit that like button for the YouTube algorithm, and let's jump into a breakdown of Trump's energy stocks.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So, this is GE Vernova. This is that $10 billion of revenue and that 10% year over year. This is a serious growth in orders. GE Vernova is a manufacturer of power generation equipment. It makes sense given the GE, General Electric, the blue chip is in the name. GE Vernova is, I believe, a spinoff. NRG is an independent power producer. So while one way to look at how stocks are doing well is to look at energy and utilities ETFs, healthcare ETFs. Interestingly, only GEV is in one of these ETFs. GEV is in the utilities ETF. NRG, because it's independent, is not in either. Still, we can look at these for a little bit of indication of how money is flowing in the market. So XLE has sold off a little bit recently. And just to make it super clear, this is the massive down day in the market that is causing everyone to be concerned. And it's almost as big as the 10-10 day when Trump and Xi had the miscommunication about rare earths. So what's going to happen from here? No one actually knows. If anyone does, they would be a billionaire. What we do know is that this is very choppy and it's not the time to get aggressive. So what's commonly a good idea in times of uncertainty is to do what smart money does in times of uncertainty, what big money does. And typically they find safe harbor in energy, sometimes gold as well. And what we're seeing right now is if we look at energy, energy's been doing well, okay? in the last couple of days, it hasn't done well in really the last week. But the reason that GEV, which is in the utilities ETF, is interesting, and why NRG, energy, which is in neither ETF, is interesting, is take a look at these bases. So if we draw a line, just a straight line that everyone can see, pretty much across this level, this offers a really good risk reward opportunity to buy here, risk very little, and look for a move up. I know this is a mathematical way to look at stocks, but when you don't know what to do, betting a small amount, looking for a big move up is a really smart way to do it. And if you look at how this stock moves, this is over the last 10 days, it moves 5% a day. I know the last couple of days have been significant moves, skewing that slightly to the upside. But the fact that it moves a lot means it has a lot of opportunity to move up, and your minimal risk can turn into a big gain. There are slower stocks that might be interesting as well, like ExxonMobil in energy. ExxonMobil is in XLE. Most of the stocks in XLE are big stocks. So I don't think it's a good idea to buy Chevron, which is down right now, just like XLE is down. I don't think it's a good idea to buy ExxonMobil, even though it's setting up because it moves so slowly. So for that reason, I think this independent power producer is interesting. I think this earnings reaction is okay, given that the market went down over that time. Sure, it went up briefly, but since early November, the market has gone down. So this is practically relative strength. It's down a little bit, but in general, over that time, all of the big companies got crushed, and NVIDIA is no exception. If you look right here, NVIDIA is down over that period, as well as similar companies that had even more sensational drops. AMD with a big drop over that period of time. So we can take a look at the ETF as an indication of how energy is doing as a whole, and then we can take a look at NRG as an opportunity in that ETF for a big move up. So that's a look at NRG, and I'm starting with that one because it's an actual producer of power. I mean, GEV produces the equipment, so it's less of a pure play on this safe haven trade where people don't want to buy NVIDIA right now. People don't want to buy Meta, which has been down significantly after that earnings hit. So buying an energy producer seems to make a lot of sense right now. It's not a tiny company. It's 30 billion. They're in the US and Canada. They're just not an ExxonMobil or a Chevron. So that's a little bit about NRG. And if we look at basically challenges, natural gas is actually doing pretty well. Of course, data center growth will help all of these energy producers, provided they're chosen to produce energy for these data centers. And the fact that this earnings is solid basically says this company is doing well. So they beat estimates on earnings per share and revenue. So it's not a big worry that this revenue growth is not super big. They have improved margins, and everything seems like a go for this company. They're big enough where you don't have to worry about dilution, selling shares into the market. So everything seems like the setup that you see on the chart. And if we zoom out, we can really see that base. It's massive. maybe it's more clear on a weekly chart or even a monthly chart, this is very interesting. So is this going to go up tomorrow? I don't know. Does it look like it's offering a very clear risk reward off of this shelf that's been going on for 6 months? Yeah. So that's NRG. I think GEV is very similar with this sell-off and this higher low from early November, heading back all the way to Q2 earnings. This one, obviously it's sloping down a little bit, but it's holding up well from that initial Q2 earnings move, and it has a higher low as well. So you can dive into the detail on that intraday chart, but the big deal is that this company has 10 billion of revenue, a solid amount of orders, and there are competitors, of course, but this is a pretty differentiating growth. 55% organic growth. And I'm not going to dive into this because I don't want to fall asleep, but orders of 14.6 billion increased 55% organically, driven by equipment growth and services growth as well. So I think that equipment growth is probably the most durable, highest margin. And this is not a great margin in general, but if we look at ABB and we look at the actual chart, sure, it may have been around longer, but look at this chart. While Thinkorswim loads, I think GEV is probably looked at as a remnant of General Electric as well. And I don't think it's really a problem that they don't have much in the way of wind as a source of power. I think right now people are just looking for anywhere to park their money. And the fact that wind revenues are down 8% in the quarter, people still look at wind as a nice to have, an additional source to add into the mix. And it blows more at night. Obviously, the sun shines during the day. So you need a mix regardless. And data centers, I don't think, are going to be powered solely on wind. It sounds like natural gas and oil are going to bridge the gap until we get to nuclear. So you have to be a little bit careful. Orders don't necessarily translate into revenue. We have to actually see if that backlog plays out. But all of this is downstream from NVIDIA, and everyone is having the same conversation about NVIDIA's circular revenue. If OpenAI is getting money from Microsoft to pay NVIDIA, who's using that money to invest in all of these tiny AI startups, well, is that really revenue counted on everyone's books? Right now it is, and the argument is that 6 years ago, NVIDIA sold chips or sold compute, that is backlog 6 years ago that's being fulfilled today, and those chips are still being used today. So for that reason, it sounds like when they sell backlog today, it's likely to be recognized 6 years from now. So as long as the top of the value chain, which is NVIDIA and the hyperscalers, Meta, Google, actually use the GPUs, then all the companies downstream are going to benefit as well. And GEV's backlog is going to get fulfilled as well. So there's definitely a reason that the market is so sensitive to NVIDIA earnings. And sure, everyone expected NVIDIA we can look at the intradaily chart to see exactly what the concern was. Everyone expected the whole market to just go up today. But as we've talked about on this channel, if you're new to this channel, one of the best ways to decide to enter a stock after earnings is not immediately when the stock releases earnings, but actually a few days after. And you can see what happens sometimes. This is an earnings day, and the next day the stock went down. This is an energy example, Constellation Energy. But it's even more clear if you look at some of these other companies like Microsoft and even Palantir had excellent earnings and still sold off. So you really need to not just focus on what the earnings are, but wait for the candle to close. So for that reason, we saw what happened with NVIDIA today. It hurt the market. GEV looks like it followed that trend like a lot of companies did, but it's holding at this important level at this in bottom of this range, and you can use this as risk to take a position for a move up in a very similar way as you can for NRG. So those are the two stocks, those are the two ideas, both energy stocks that seem like they have solid potential based on the chart and based on the sector they're in, which is going to play a big role in data centers. So if you like these two ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to take advantage of our $19 Black Friday deal, head over to stockscommunity.com and give it a try. It's a 7-day trial, and you'll see a couple testimonials from our members there who have had some pretty incredible results. I'll see you in the next one. And as always, it's not financial advice, but I hope it helps.
This is Sam Putnam.
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 This is Sam Putnam.